Hi traders, and welcome to my video on the medium price indicator, where I'm going to teach you how you can use this indicator to help you capture moves such as this one for over 300 pips. Okay, so the medium price indicator you can see is attached to my chart here. Basically what it does is exactly what it says in the name. It shows you the median or middle price, if you like, over a certain time period. I'm using the default settings here. This is a euro dollar 4-hour chart on the MT4 trading platform. I sourced the median price indicator online. You can probably find it for the platform that you're using. However, whether it's actually necessary to go out your way to get it, we will discuss in this video. Quick hint, it's not. You can do these things yourself without any extra indicators, but we're going to get into that over the course of the video. This is a 4-hour chart. I do like to trade the 1 hour, 4-hour daily, and I will also look at the weekly and monthly for reference. Reason being is I find the higher chart timeframes have more reliable signals, primarily because of the fact they include more price data compared to, say, the 5-minute and the 15-minute charts. Okay, you can use this strategy on any trading instrument, Forex, crypto, stocks, commodities, indices, etc. So what we're going to do is we're going to look for a trend, okay? I like to trade the trend. I'm not interested in fighting with choppy markets. I'm going to wait for a trend and look to get in at the earliest opportunity. So the first thing I do is I can mark my resistance on the chart up here. Support along here, okay? Nice wedge pattern formation. We also have a triple top formation there. This resistance has been tested at least 3 times. So for me, it's strong. And we're going to look for a breakout to the downside, which is exactly what we get. Could have probably picked it up here somewhere had we honed into the lower chart time frames, but there are other times where that would get us into danger. So we're going to stick to the higher chart time frame signals. So with the medium price indicator, what we're looking for is price to start trending, which it does. Okay, we have our breakout here. The market is making lower highs. We can clearly see we're in a downtrend here. I'll zoom in just to show you closer. Okay, so lower highs, we're in a downtrend, and this is the medium price indicator, right? Now this is where it comes into play. Because when you're in a downtrend, you don't just want to sell at any time. Yeah, you may get it right some of the time, but you don't really want to sell at the bottom of this bar. Okay, wouldn't want to sell here. You wouldn't want to sell here. You don't want to sell at the low. Okay, you want to wait for a pullback. Okay, for a favorable entry into a trend. And that's where the medium price indicator comes into play, or my interpretation of it. See this here, this ranging consolidation nonsense I was talking about. I'm not going to bother with this. I mean, we can't be buying and selling every time price comes to the medium price indicator here. We'll get whipped in and out of the markets for fun. You wait for the trend, nice downtrend there. So what you do, you wait for the pullback. If you weren't smart enough to get in here on this nice breakout, I mean, I probably would have looked to have taken that trade, to be honest with you, simply because we got this strong level of support. Once it's breached, big breakout to the downside, that would have been the ideal entry there. And the only thing the medium price indicator would have told me there is that price is below it. I don't need that indicator to tell me where price is. I can see with my eyes. I can even just use a basic moving average, which is included in the trading platform. In fact, I really don't think the medium price indicator does much more than a moving average, other than perhaps adjust more dynamically. And yeah, so the moving average there, you can see this red line. I'll just change the color. Should change it to so you can see it. Let's just make it that color. No, that's make it slightly thicker. Okay, so the green one is just a standard moving average. As you can see, it's going to do the same principle, so you can also use that for this trading strategy if you don't want to go out your way to get the medium price indicator. Okay, so there's the medium price indicator, and if we didn't get out on this, didn't get into the downtrend on this breakout, which would have been ideal, you could have traded on the pullback. Okay, so there's the pullback. Price trending downwards, lower highs, comes back towards the median price, and there you go, breakout entry there. You don't necessarily trade as soon as it pulls back and touches the line. There's no exact science behind it that way. In fact, I wouldn't do that. Like you can see here, if you just sell as soon as it price pulls back and touches, it's not an ideal entry point. You can just use that as visual confirmation. Okay, there's a pullback. Let me mark my support level. Okay, and then wait for a breakout and get into the trend that way. Okay, as you can see, from this support level here, that would have been a decent entry point into this particular trend. And the support level then becomes resistance here around this area, lower highs, so we continue down. Okay, so resistance, price moving away, forming a trend, wait for a pullback into the median price indicator, and then we can look to time our entry using support in a downtrend or resistance in an uptrend. And a breakout there, nice entry, breakout there, nice entry, breakout there, nice entry. Have a pullback around here. Again, we don't sell as soon as price pulls back. Instead, we can draw our level of support. Almost an M pattern forming there. Nice breakout to the downside. Again, there's no coincidence you see these big candles on the breakout. Okay, it's because that's the area traders are watching to get in on this trend. Price pullback here. Breakout there. That support actually becomes resistance here. Same again. Pullback, support level breakout. It just shows you, how easy it is really to use to get in on these trends after a pullback. Really, all the median price does is just gauge the pullback area. From my perspective, I mean, I wouldn't necessarily need it. I can see with my eyes when there's a pullback. Okay, but I understand people like fancy indicators on their charts. Just make sure you're trading in the direction of the trend, timing your entry, and most importantly, money management, which I'm going to get onto now. So money management, let's just say we took this pullback here. Initial stop loss I'd place around this area, which is around 15 pips, relatively tight stop loss for the 4-hour chart. And then as price moved down, okay, I just move the stop loss with it. So first I'd move it to break even. Then after this drop here, I'd move it above here. Okay, after this drop above here, after this drop, probably here, then here, then here. Pull back as it drops, stop loss will be here. After this drop there, my stop loss probably be around here somewhere. So we would be locked in for almost, we to the century, over 200 pips. I mean, not bad for 2 to 3 weeks worth of trading. And it's obviously less chart watching. It's the 4-hour chart, which is great. I mean, you can get that many pips without stressing yourself out trading 5-minute or 15-minute charts all day. Okay, so just time your entry. Don't be lazy. Draw your lines, support and resistance, trend lines, and the median price can be a good way to find the pullback for entry. Obviously, keep an eye on candlestick patterns as well for additional confirmation. I've got lots of videos on various candlestick patterns that are always good to be aware of. Okay, I just wanted to go over an example of a long trend. So buying opportunities using the same strategy. Principle's the same. We mark our support level. Okay, our resistance level, which is here. It's touched multiple times on the way down, then price breaks up. See, there's a bear trap here. Traders are trying to sell, get in on this short trend here. They're too late to the party. They're all going to get trapped. They do. Classic bear trap. Price shoots upwards. Stop losses are taken out. Those who were in a good position are exiting as well. So it just causes all this momentum you see to the upside. And the market moves up significantly. Right? And we could have ended on this breakout, but the median price indicator is not telling us that. Okay, it's telling us price is above it, but as I mentioned earlier, we're not just buying and selling when price goes above it. If you look at this here, you wouldn't have gotten, well, buy, sell, buy, sell, buy, sell, buy, sell. You know, we're waiting for a trend to form first, okay? So our trend is formed here. Then we get the pullback. So it does really shoot up here, and then you could have consider this pullback. But as I said, you don't buy as soon or sell as soon as price pulls back and touches it. What we can do is we would mark our initial resistance here, but then when we see this new resistance level, okay, we can mark here and then just wait. W pattern again, so down, up, and then the breakout above. Nice pullback around the median price indicator, so we're looking to get in on this trend at a favorable entry, which we can here. Place our stop loss just below the low, and this would be, so that would be around 15 to 20 pips. For a trade with almost 300 pips potential, excellent risk to reward. We don't want to jump out of the trade too quick. Don't want to get excited after this candle and be like, wow, you know, I'm a millionaire. Let me just close all my position. No. Lock it in at break even. That's what I would do. And then as price goes up, pulls back and continues, just move the stop loss to a profitable position following the lows all the way up. Okay, so we can maximize the move as much as possible. We're not going to exit here because we don't, nobody's picking the top and picking the bottom every time, but we're going to get as close as we can to there. We may see this fall here. The lower highs, the M formation there, it's actually forming a wedge as well. So, you know, the price action pattern telling us we would have taken our profit off the table there if we hadn't had our stop triggered prior to that. So again, simple strategy. Trend, pull back to the median price, enter on a breakout. I mean, that's bread and butter trading. Happens here again. If you didn't get in on this one, you're still not late to the party. You know, you can have same principle, resistance. You don't buy, remember, as soon as price touches the median. You know, you've got your resistance as a guide, and look at that breakout bar there. No coincidence. Traders are watching. Everyone knows. Breakout there. We're in a good trade. Okay. You can use the median price indicator as a stop loss area as well. Thinking about it. However, you might get taken out prematurely if you do that. For example, in this trade here. If we had done that, we could have been taken out around this area. Granted, we could have re-entered here, and it might not have been a bad thing if price continued down, but otherwise we'd still be in for the duration of the trend. Okay, and as price goes away, you can, you know, you've got matching high candlestick patterns there. You could trade that breakout. But by now we're starting to be cautious. You know, this trend's been going on a while. We don't want to buy at the high. You do have a pullback here, maybe one last rally, W pattern, and that big breakout candle shows me that people were jumping in, still jumping on the train right at the last stop. Okay, well, there you go. That's a basic medium price strategy. And just to reiterate, I mean, you don't need a fancy indicator to do that. If we just replace it with the moving average, I mean, it does more or less the same thing. So you can apply the strategy. In fact, take the moving average off. You can still do it. You just draw your trend lines and your support and resistance levels. Look for a pullback. Simple. Well, not simple, obviously, but I'm just trying to emphasize the fact that you don't need the fancy unicorn indicators. Just good money management and good timing, patience, and higher chart timeframes for more reliable signals in my experience. Hopefully you found something useful in this video. I appreciate you watching. If you can please like and subscribe, it will really help the channel, and I'll catch you on the next one.